What's going on, you guys? My name is Zach Hartley and welcome back to another weekly watch list video. In this series, my goal is to share with you what stocks are at the top of my watch list going into the week ahead, as well as how I feel about the market conditions. Now, if you're interested in seeing more of that, remember to click that like and subscribe button, and let's jump right in. Okay, so the big topic this week and what is dominating the markets right now and the world is the Russia-Ukraine conflict. My prayers and thoughts go out to the people of the Ukraine. I am going to try and support them as much as I can, but this is definitely the topic that is dominating the markets and kind of controlling what is happening out there, and it feels like this conflict is escalating. We have more and more videos coming back, we have more and more troops rolling in, we have more and more basically just conflict stemming out of what is going on. And because of that conflict, we are seeing increasing oil prices, we are seeing increasing gold prices, we're seeing increased uncertainty in the market. We are probably going to see more defense spending and inflation caused by that spending. And we are also going to see a larger focus on cybersecurity. So as somebody that is watching this unfold, here is what I think is happening and will happen because of this conflict, especially if it continues to escalate. This is what I think is going to happen. Now, as somebody that is investing, that's trading the markets and trying to be active in their portfolio management, these are some forces and some supply and demand shifts that you're going to want to take note of. So just to show you that this is already happening, here's the price of gold over the last 6 months, I believe. And as you can see, the last close was over $1,900. Pretty big number right there. This is close to all-time highs, and at least over the last sort of 2 months here, while this conflict has been developing, gold has been absolutely skyrocketing, especially since the beginning of February here. Now, when it comes to oil and gas and energy, we can also see that the United States Gasoline Fund, which is basically designed to replicate gasoline, and it's absolutely skyrocketing. It is going up right now. The price per barrel is over $100. And the price for energy is going up pretty much worldwide right now. And then lastly here is the volatility. So this is the VIX, this is the volatility index. And basically what it does is it measures out of the money options over the next few weeks. And it says, where do investors think the market is going? And it kind of indicates uncertainty. So when this goes up, it means that the markets are fairly uncertain. And over the last little while, we've seen two pretty dramatic spikes here over the last sort of 2 to 3 months here. And we have seen higher lows. So for instance, we're not really coming down to this 100 area anymore, or at least recently. We seem to be kind of steadily increasing right here, and you can see that our two moving averages, instead of crossing over like they have done in the middle here, they are now kind of building a little bit of a gap here. That's this blue line and this red line in here. Those are basically the moving averages, and it shows that we're slowly moving higher and higher with regards to volatility. And then the last point that I mentioned there was cybersecurity. So cybersecurity in my mind is probably going to be a very big topic over the next 6 months. So I'm looking at making some investments in the section just to kind of show you here. This is anonymous. They're on Twitter as Your Anon News, and they are actively attacking Russian government agencies, websites, systems, everything they can right now. And we also expect that Russia is going to try and send some cyber attacks out into the Western world, largely because of the sanctions that have just been placed on Vladimir Putin and a lot of his associates. And so cybersecurity, in my mind, is probably going to be a very large topic over the next few months. Now, last week I pointed out to you a bunch of defense companies, 3 defense companies, I guess, that I thought were going to do well if this conflict continues to escalate. And over the last week, as you can see, it has definitely escalated. And Raytheon was actually one of the big winners. I pointed this chart out and this company out to you last week, and just on Friday there, they went from $90 to $98. Or Thursday and Friday they did that move, and it's pretty dramatic. The stock is now at all-time highs. It is breaking out of previous resistance right here, and it's moving higher at what I expect to be a pretty continued pace here. And so there is a lot of things going on in the market. There's a lot of different supply and demand shifts that are happening right now, and if the market crashes, I can tell you that there's a variety of companies that are going to do very, very well. Raytheon probably being one of them, gold companies probably being one of them, even oil and gas companies right now, so a lot of them are at all-time highs. We're going to take a look at one here in just a minute. but that's what's going through my head as we go into the market this week, is everything that I just told you there. Now, when we take a look at the NASDAQ, you can see that it was just absolutely crazy week in the NASDAQ. Tuesday and Wednesday were both red days, and then on Thursday, we opened dramatically lower on the NASDAQ. We actually opened around 13,000 and rallied up to 14,000, which is just absolutely insane for the NASDAQ. And on Friday, we had another strong day. So very, very interesting week on the NASDAQ. Very mixed results as well. When we take a look at the S&P 500, it's a very similar trend here, but we definitely fell through our support that was established at 4,300, which is not a very good sign. We did have a nice recovery on Thursday and Friday here, as you can see, but we definitely kind of fell through that 43 level of support. And in the Dow Jones here, you can see that we are now starting to set lower lows, which is definitely not a good sign. We have a lower high as well. And it's pretty easy to say that we are in a bearish trend right now on the Dow Jones. Things aren't looking great. We've definitely got some choppy action. There's definitely room for a recovery. We're not crashing yet, but we're not going in the right direction as of right now. When it comes to Bitcoin, this is really interesting. So Bitcoin, we kind of broke out of this trend right here, but we weren't able to break above 45,000. We actually fell all the way back down to 35,000, and over the last few days, we've sort of started to climb back up. And so what this kind of shows us is we now have a higher low on the price of Bitcoin on this chart, and that could be a very positive sign, a very good indication. And slowly but surely, I think we're starting to chew away at all of this selling pressure on Bitcoin, and honestly, over the long term, I think it's going to go up. That's why I'm mining Bitcoin. I hold some Bitcoin, and we'll see how things go. But as of right now, definitely not a bearish or bullish trend right here. We're pretty choppy, and you could almost even categorize this as trading sideways. Now, when it comes to earnings this week, we've got a fairly big week of earnings. We got Berkshire Hathaway on Monday, as well as Lucid and Zoom and Blink. On Tuesday, we've got Target and Sea and SoFi. On Wednesday, we've got Snowflake and ChargePoint. So we have both of the EV charging companies kind of opening up and giving us earnings this week, so that will be nice to see. And then on Thursday, we've got Best Buy, we've got Costco. Canadian Natural is a big oil and gas company that is doing extremely well here, headquartered in Calgary actually. So I'm interested to see their results. And then Friday, a couple of small companies. I don't really follow any of these ones, but that's what it looks like for the week ahead. SoFi here, this one's going to be a big one on Tuesday, so I'm really interested in that. Took another look at Celsius this week. I'm going to definitely watch those earnings and see how that stock performs afterwards, but I'm not chomping at the bit. Now, I don't have a ton of stocks to go over this week because I know this intro was a little bit long, so I want to keep it nice and focused. First of all, cybersecurity. I said it in the beginning. I think it's going to be a big focus over the next 6 months. The cybersecurity, the company that I like best is Palo Alto Networks, especially if we can pass through this kind of 570, 580 mark right here. Palo Alto, I think, is a fantastic company, great management, great track record, and in my mind, they're probably the industry leader in cybersecurity. Now, if you're looking for exposure to the energy sector, or you think because oil and gas is going up and the turmoil that we have, I think a lot of energy companies are going to do very well. Enbridge is probably the safest bet for me. I really like the company, very long term, very well managed, and the dividend is at 6.3% right now. And Enbridge, everything about Enbridge is focused on like 20, 30, 40 years down the pipeline. So this is a company that you should be able to buy and hold and just collect that dividend for the rest of your life. So I really like Enbridge. It's available in Canada and the US as well. Now, ChargePoint. This is a company, like I said, is reporting earnings this week, and it's a really interesting level. You can see the stock was trading as high as $36 here, been trading pretty bearishly over the last few months, and just recently we had a bit of a pullback here, and now we have retested the lows. So at 11.20 right here, we've got some pretty clear support, and right here around $15, we've got some resistance. And so I think that with earnings and with everything going on next week, ChargePoint is either going to break down below $11 and I'm going to want to short the stock, especially on bad earnings, or things are going to recover, they're going to give us good earnings, and we're going to break above 15, in which case it could be a great opportunity for a swing trade back up to 20. Now, the next two stocks here I want to point out is really interesting because they actually both have double bottoms on almost the exact same day. So the first one here is Google. Obviously, we've got resistance right around 3,000. We also have some very major support right here around 2,500. You can see we got bought up at 2,500 right here in January, and we just got bought up at 2,500 on Thursday. I really like Google as a company. It's a fantastic long-term hold, and this double bottom right here could be the perfect run back up to 3,000 for a beautiful short-term swing trade or a great long-term entry. And if you look at this, look at the dates for this double bottom right here. It lines up almost perfectly with Coursera. There's another company, I hold some options in it right now. We've got a double bottom on Coursera at 1750. Double bottom is a reversal pattern, and when we see that in a bearish trend, that could be an indication that we're about to go positive or that we're about to go into the bullish direction, and that is when you want to buy in. So I currently own some options. They're very high risk. They expire in about a month. I absolutely love Coursera though. I like the business model, great revenue, great gross profit margins, and I think it's a good company long term. So I'm in it a little bit early right now, but we will see how things go over the next few weeks. Now, here's the summary for the video. Number one, Russia and Ukraine. That is what is dominating the headlines. That is what's dominating the market. That's what's going to move the market. You need to make sure that you're up to date on what is happening here. Make sure that you understand the supply and demand forces that this conflict is causing. You also need to understand that if we go to war here, there's going to be a whole lot of spending on the part of these governments, and inflation is more than likely going to get worse. So if you're holding a bunch of cash, you might want to find somewhere safe to deposit or deploy it, possibly into some bonds or some GICs, depending on your risk tolerance. Now, if you're interested in learning more about any of that or figuring out how to actually manage and build your own portfolio, definitely consider checking out my stock market course. It is completely free. There's 10 hours of content that will walk you through everything that I just showed you here, but in much more detail. There's over 11,000 students that have gone through it, 380 reviews and 1.6 million minutes of watch time. I also have 4 other courses on there that will walk you through crypto, walk you through options, personal finance, and dividend investing. So if you're interested in any of those, they're all hosted on Skillshare. The link is in the description to this video, and you get free access to everything for 2 weeks to 1 month when you use any of the links in the description to my video. If you got any value out of this video, please remember to click that like and subscribe button. And if you want to see this video next week, please remember to turn on that notification bell. All of those things really help me out. Remember to leave a comment down below, and we will see you guys next week. Good luck trading, good luck investing, and we'll talk to you soon.